Global markets are flashing red. Bond yields are exploding, gold is hitting record highs, and the Federal Reserve is facing unprecedented political pressure. This isn't just another routine market wobble, it's the type of confluence of events that signals deep cracks in the financial system. In today's urgent deep dive, we'll unpack why long-term bond yields are soaring to generational highs, why gold is surging above $3,500 an ounce, and why investors are questioning whether the Fed can remain independent at the most critical moment in decades. This is the story of a system under siege, the bond market meltdown. Bond markets are considered the bedrock of the financial system. They fund governments, anchor mortgage rates, and guide investment flows. But right now, the bond market is in revolt. In Japan, 30-year government bond yields have surged to a record 3.28%. In the U.S., 30-year Treasury yields briefly spiked above 5%, a level that reverberates through the entire global economy. The UK is also under fire, with gilt yields flirting with 27-year highs as fiscal doubts plague the government. These yield spikes mean governments must pay dramatically higher rates to borrow money, raising the specter of fiscal crises. Investors are asking, are sovereign debt levels sustainable anymore? We'll explore how rising yields pressure budgets, risk triggering debt spirals, and connect to historic crises like the Eurozone collapse of 2011 and the Latin American debt meltdown of the 1980s. Gold's record-breaking run. Amid the chaos in bonds, investors are running to gold. Prices have surged past $3,500 an ounce, an all-time record. Silver is riding the wave, too, hitting decade highs. Gold's appeal is timeless. When trust in governments and currencies wavers, people turn to the one asset that has held value for millennia. But there's more to today's surge. Central banks are stockpiling gold at record levels, diversifying away from the US dollar. ETFs are seeing record inflows as retail and institutional investors pile in. Meanwhile, silver demand is boosted by both safe haven flows and industrial demand from green energy. This section will trace the psychology of the gold rush, compare it to past booms in 1980 and 2011, and ask whether we're witnessing the dawn of a new gold era or a bubble forming under stress. The Fed under siege. The Federal Reserve is supposed to be the world's most independent and trusted central bank. But right now, that trust is crumbling. President Trump has already dismissed Fed Governor Lisa Cook, and questions swirl over whether Jerome Powell can even complete his term. The Treasury Secretary is steering the appointment of the next chair, raising alarms about political capture. This comes at a critical moment. With inflation still above the Fed's 2% target, unemployment steady, and markets jittery, the Fed's decisions will shape the global economy. If investors lose faith in Fed independence, the US dollar itself could be destabilized. We'll explore how political interference destroyed credibility in other nations, like Turkey and Argentina, and why the US may not be immune to the same fate if the Fed becomes a political pawn. Global markets on edge. The bond meltdown and Fed turmoil aren't isolated. They're ricocheting across the globe. In Japan, equities are slumping amid political chaos. In Europe, France is gripped by instability, adding to financial strain. In Australia, the ASX 200 has tumbled, with billions wiped off market value as investors pile into gold miners like Bellevue Gold and Northern Star. Emerging markets are especially vulnerable, as their dollar-denominated debts become harder to service when yields soar. This section will show how interconnected the world has become. A rate spike in New York reverberates in Tokyo, London, and Sao Paulo within hours. History teaches us that such global contagion can turn a localized crisis into a worldwide meltdown. Think of the 1997 Asian financial crisis or the 2008 global financial crisis. Tariffs, trade, and retail shockwaves. Adding to the turbulence are tariffs. Legal battles continue over Trump's authority to impose and expand tariffs. But retailers like Walmart and Best Buy are already warning of rising costs hitting consumers. This has direct consequences. Higher prices for food, electronics, and household goods at a time when inflation is still straining family budgets. Tariffs amplify inflationary pressures while also crimping consumer spending, creating a dangerous feedback loop. We'll analyze how global supply chains are being reshaped, how tariffs filter down from boardrooms to households, and why consumer spending, the backbone of the U.S. economy, is at risk of cracking. What comes next? Scenarios. The future hinges on the Fed's next moves and upcoming economic data. If job growth cools and inflation eases, the Fed may cut rates, sparking relief rallies but risking inflation's return. If inflation proves sticky, the Fed may hold rates, pushing the economy toward recession. The nightmare scenario? The Fed caves to political pressure, losing credibility entirely. We'll outline 3 scenarios: relief, recession, and regime shift, and explore the risks and opportunities in each. From equities and bonds to gold, silver, and crypto, this section will map out what investors should prepare for. A system under strain. September 2025 is shaping up to be a month of historic importance. Bond yields are flashing warning signals. Gold is screaming that trust in currencies is evaporating, and the Fed's independence is under siege. Add in global political turmoil and tariff pain, and you have a system under maximum stress. For investors, the takeaway is clear. Volatility is here to stay. This is a time for vigilance, diversification, and discipline. Those who prepare will survive and maybe even thrive. Those who don't may be swept away in the storm. If this breakdown helped you understand today's chaos, smash the like button, subscribe for more urgent market analysis, and share your thoughts below. Is the financial system breaking? Is gold the only safe haven left? And can the Fed survive political attacks? Comment with your take. Your perspective may be featured in our next video. Together, we'll track the storm and prepare for what's next. This is Felix. See you next time.